Welcome back to Microsoft Sphere, where we dive deep into the stories shaping our world. The news cycle never sleeps, and neither do we. Get ready for a rapid-fire download of the most critical updates you need to know, straight from the front lines of innovation and industry. We're talking about major shifts, strategic moves, and what it all means for you. Don't miss a beat. This is your essential briefing, delivered with the energy you expect. Let's get right into it. First up, a surprising move from a tech titan that's making waves despite its soaring stock. We're breaking down the latest employment figures and what they signal about the company's future direction. Is this a sign of strategic restructuring or something more? We've got the details that matter. Next, we're tracking a series of significant workforce adjustments within a major player in the cloud computing space. This isn't just about numbers. It's about a company reallocating resources and refocusing its efforts in a rapidly evolving market. We explore the implications of these decisions and the broader industry trends they reflect. Then, we shift gears to look ahead at upcoming financial reports from a familiar name in the tech world. With its eye on ambitious growth and a significant push into new technologies, what can we expect from their latest earnings? We're analyzing the projections and the market sentiment surrounding this pivotal announcement. And finally, we're examining a company's strategic positioning in the highly competitive AI landscape. What does it mean to be a key player in this transformative sector, and how are their financial forecasts shaping up? We're unpacking the numbers and the big picture strategy. Stay with us, you won't want to miss any of these crucial updates. Hit that subscribe button and ring the notification bell so you're always in the know. Tech giant makes unexpected cuts amidst record stock performance. In a move that has raised eyebrows across the financial and tech communities, Oracle Corp has reportedly initiated significant job reductions, eliminating over 350 positions across its California and Washington operations. This development is particularly noteworthy given that the database and cloud services giant stock has been trading near its all-time highs, recently reaching $223.45. The discrepancy between robust stock performance and workforce reductions has sparked considerable discussion. Official worker adjustment and retraining notification, WARN filings, submitted to California and Washington employment agencies, confirmed the layoffs. According to the Register, California's Employment Development Department verified the elimination of 254 roles across 3 state facilities, while Washington state's employment figures indicate 101 jobs will be lost in Seattle, with these changes becoming effective November 3. The Redwood Shores campus, Oracle's headquarters, is slated to experience the most substantial impact, with 187 employees affected. Further reductions include 36 positions at the Pleasanton facility, an entity acquired through the 2005 PeopleSoft acquisition, and 31 jobs in Santa Clara. Industry insiders suggest that these cuts may be part of a larger global restructuring effort by Oracle, potentially involving thousands of employees worldwide. The primary focus of this restructuring appears to be a strategic pivot towards significant investments in artificial intelligence infrastructure. One source close to the situation estimated that as many as 1,000 layoffs could occur globally, with further reductions anticipated in October. This strategic reallocation of resources comes at a time when Oracle is aggressively pursuing growth in the cloud sector, aiming to challenge established players like Amazon Web Services, Microsoft Azure, and Google Cloud. The timing of these layoffs, occurring while the company's stock is performing exceptionally well, has puzzled some observers. Oracle's financial performance has been strong, with fiscal year 2025 revenues reaching $57.4 billion, an 8% year-over-year increase. CEO Safra Catz has projected even more accelerated growth for fiscal year 2026, driven by advancements in cloud services. The affected roles predominantly span the cloud infrastructure division, including software developers, business analysts, program managers, and IT specialists. This strategic shift aligns with a broader trend in the tech industry, where companies are increasingly prioritizing AI development and cloud capabilities. Oracle is not alone in this trend. Other major tech firms have also implemented workforce reductions to reinvest in AI initiatives. Meta Platforms, for example, shed 21,000 jobs in 2023 as part of its Year of Efficiency, a move that coincided with significant stock gains. Similarly, Salesforce recently announced the elimination of approximately 4,000 support roles, with CEO Mark Benioff explicitly citing AI automation as the reason for these redundancies. This pattern suggests a widespread industry recalibration, prioritizing AI and cloud infrastructure over certain traditional roles. Despite the reported layoffs, Oracle stock has seen a year-to-date gain of 34.58%, even with a slight dip on Tuesday. The company has secured substantial cloud service agreements, exceeding $30 billion, which includes strategic partnerships with entities like OpenAI and lucrative government contracts. These include a notable offer of 75% database software discounts through November, indicating a strong push to capture market share in the cloud and AI sectors. This story highlights a complex interplay between corporate strategy, market performance, and workforce dynamics. Now, let's shift our focus to the specific regional impact and the broader context of ongoing tech industry adjustments. Tech layoff wave continues as Oracle slashes more jobs in Seattle. In the latest development in a string of tech industry workforce reductions, Austin-based cloud computing giant Oracle has announced the layoff of 101 employees in Seattle. This marks the second round of significant cuts at this location in less than a month, underscoring a broader trend of restructuring and resource reallocation within the technology sector. The layoffs, disclosed through a state regulatory filing on Tuesday, add to a growing list of tech companies that have implemented job cuts this year. Since May, major players including Microsoft, Amazon, T-Mobile, and cybersecurity firm F5 have either announced or confirmed layoffs. Microsoft, in particular, has undergone extensive reductions, letting go of over 15,000 workers across several rounds. Amazon also confirmed an undisclosed number of layoffs in July, reportedly affecting hundreds within its cloud division. This latest move by Oracle is part of a larger strategic transition for the company. Oracle relocated its corporate headquarters to Austin, Texas, in 2020 and has been systematically reducing its physical footprint in Seattle while simultaneously expanding its Austin campus and planning a major new health campus in Nashville. Co-founder Larry Ellison has indicated that the Nashville site is intended to become the company's ultimate world headquarters. The specific impact on Oracle's Central Texas employees remains unclear amidst these broader organizational shifts. Many tech companies attribute these workforce adjustments to shifting priorities, particularly the intensified focus on the artificial intelligence race. While companies often avoid stating that AI is directly replacing jobs, they frequently cite the need to allocate resources differently, streamlining operations and eliminating redundant roles in favor of a more agile workforce focused on AI development and cloud infrastructure. This strategic reprioritization is not exclusive to AI. Other sectors are also seeing similar trends. For instance, Starbucks announced layoffs of over 1,000 employees in February, citing a drive for a leaner, more efficient corporate workforce. However, some companies have been more direct about the role of AI in workforce changes. Salesforce CEO Mark Benioff stated that the company has replaced 4,000 customer service jobs with AI, highlighting a direct impact of automation on specific roles. Oracle, meanwhile, has not provided a specific reason for the current wave of layoffs and did not respond to requests for comment. Prior to the 101 layoffs announced Tuesday and a previous round of 161 in August, Oracle employed approximately 3,900 individuals in the Seattle area, according to the Puget Sound Business Journal. Oracle, once a significant tech employer in the Seattle region, alongside homegrown giants like Amazon and Microsoft, has seen its physical presence diminish. The company has vacated its downtown Bellevue office and significantly reduced its leased space in downtown Seattle, shedding nearly 100,000 square feet in the Century Square Tower alone in 2023. This downsizing in Seattle reflects a broader strategic shift away from its former Silicon Valley roots and a consolidation of operations in its new Austin headquarters and other expanding locations. These workforce adjustments paint a picture of a tech giant navigating a period of significant strategic realignment. But what do these moves mean for the company's upcoming financial performance and its position in the burgeoning AI market? Oracle gears up for Q1 earnings amidst AI ambitions and market caution. Oracle, ORCL, is on the cusp of releasing its fiscal 2026 first quarter results, scheduled for September 9, with analysts anticipating continued revenue growth fueled by its aggressive push into AI infrastructure. Projections indicate a constant currency revenue increase of 11-13% and a dollar-denominated growth of 12-14% for the quarter. The Zacks consensus estimate for total revenues stands at $15.01 billion, representing a solid 12.8% uplift compared to the same period last year. On the earnings front, the non-GAAP earnings per share are expected to range between $1.44-1.48, signaling a 4.6% increase, with a slightly higher range of $1.46-1.50, suggesting 5.7% growth. The consensus earnings estimate of $1.47 per share has seen a 5.76% increase over the past 30 days. However, Oracle's recent earnings history shows some volatility, with the company missing the consensus estimate in 2 of the last 4 quarters, averaging a 1.9% shortfall, while exceeding expectations in the other 2. The company entered its first fiscal quarter of 2026 with considerable momentum, building on impressive fourth-quarter results. Its strategic focus on AI infrastructure, particularly the significant Stargate partnership with OpenAI, has been a key driver. This landmark deal, involving 4.5 gigawatts of data center capacity, is projected to generate $30 billion in annual revenue starting fiscal year 2028. Oracle has also been instrumental in delivering the first NVIDIA GB200 racks and supporting early training workloads at its Abilene, Texas facility, positioning itself as a critical player in the massive $500 billion AI infrastructure ecosystem. Despite the optimistic outlook for AI-driven growth, Oracle faces notable operational challenges. Recent strategic layoffs, primarily affecting the Oracle Cloud Infrastructure division in India, the US, and Canada, signal internal adjustments. Furthermore, the company's ambitious expansion of data center capacity is susceptible to ongoing supply chain constraints and semiconductor shortages, which could impede its growth trajectory. These factors contribute to a mixed sentiment in the market. Oracle's stock performance reflects this cautious optimism. The stock has experienced significant declines recently, with an overall inflow ratio dipping below 47% across key institutional and individual investor categories. This bearish signal suggests a general lack of immediate confidence in the stock's near-term direction. The internal diagnostic score of 5.35 indicates a neutral technical outlook, with neither bulls nor bears holding a strong advantage. The market appears to be in a wait-and-see phase, with Oracle's stock in a technical holding pattern. Investors are keenly observing for potential catalysts, such as macroeconomic shifts, industry trends, or the upcoming earnings report that could decisively influence the stock's trajectory. As Oracle navigates these financial and operational landscapes, its strategic positioning in the AI revolution remains a critical focus. Let's now dive into how Oracle is carving out its niche among the top AI hyperscalers and what that means for its long-term earnings potential. Oracle solidifies AI hyperscaler status amidst earnings anticipation. Oracle is increasingly being recognized as a pivotal player in the artificial intelligence landscape, often positioned as the 4th major hyperscaler alongside industry titans like Amazon Web Services, Microsoft Azure, and Google Cloud. This strategic positioning is crucial as the company works to leverage its robust cloud infrastructure and partnerships to capture a significant share of the rapidly expanding AI market. The company's ability to offer specialized infrastructure, particularly for large AI models and data-intensive workloads, is central to its value proposition. The foundation of Oracle's AI ambitions lies in its significant investments in Oracle Cloud Infrastructure, OCI. OCI is designed to provide the high-performance computing power and scalability required for training and deploying complex AI models. This is particularly evident in its strategic collaborations. The partnership with OpenAI, for instance, is a cornerstone of Oracle's AI strategy. This deal involves substantial commitments to data center capacity, aiming to support OpenAI's massive computational needs and, in turn, generate significant long-term revenue for Oracle. The provision of NVIDIA's cutting-edge hardware, such as the GB200 superchip, further underscores Oracle's commitment to offering state-of-the-art AI infrastructure. Beyond its partnership with OpenAI, Oracle is also securing substantial cloud service agreements with various enterprise clients and government entities. These agreements often involve competitive pricing, such as the previously mentioned 75% database software discount offer, aimed at enticing customers to migrate their workloads to OCI. The company's strategy involves highlighting the performance advantages and cost-effectiveness of its cloud services for AI-related tasks, positioning itself as a compelling alternative to established competitors. The successful execution of these strategies is vital for Oracle to translate its infrastructure investments into tangible earnings growth. Looking ahead, Oracle's earnings potential is intrinsically linked to its success in scaling its AI infrastructure offerings and converting strategic partnerships into sustained revenue streams. The company's financial forecasts, as discussed in relation to its upcoming Q1 earnings, reflect an expectation of accelerated growth. However, this growth is contingent on overcoming several hurdles. Supply chain disruptions for critical hardware components, the immense capital expenditure required for data center expansion, and the competitive pressures from established cloud giants present ongoing challenges. Furthermore, the company must demonstrate consistent operational execution and manage its workforce strategically to support its ambitious growth plans. The market's reaction to Oracle's AI push has been mixed, with investor sentiment reflecting both optimism about the long-term potential and caution regarding the near-term execution risks. While stock performance has been strong year-to-date, recent price action indicates a period of consolidation as investors await clearer signals of sustained growth and profitability from its AI initiatives. Analysts are closely monitoring key metrics, including cloud revenue growth rates, customer acquisition, and the profitability of its AI-focused services, to gauge Oracle's trajectory in this highly competitive market. Oracle's bold moves in the AI arena are setting the stage for its future, but what's next on the horizon? Stay tuned as we recap the biggest stories of the day and bring you the essential updates you need to know. And that's a wrap on today's Essential Updates. We saw Oracle making strategic workforce adjustments despite record stock highs, continuing a wave of tech layoffs impacting regions like Seattle, anticipating key financial reports with a strong AI focus, and solidifying its position as a major AI hyperscaler. Don't miss out on future breakdowns. Hit that like button if you found this valuable, subscribe to Microsoft Sphere for more in-depth analysis, and ring the notification bell so you never miss an update. Got thoughts on these stories? Let us know in the comments below, and make sure to follow us on all social media platforms for real-time insights. We'll see you next time.